If you looked only at the S&P 500 on Thursday, you'd think nothing happened. It closed down merely just 0.1%. Pretty flat and pretty boring. But underneath the flat line, one corner of this market just fell almost 10% in 2 days. The S&P is hiding what's really going on, so today I'm going to show you exactly where the money is going. Remember, this is Wall Street Savant, and on this channel we discuss market sentiment and look over the major indices so you know the key levels going into the trading week ahead. Let's jump right into the charts. So what did happen in the markets today? Yesterday we got the jobs report at around 8 a.m. and one of the main takeaways to take from this is the payroll number. Only 64,000 jobs were added. It did beat the low bar of 45,000, but it's still a pretty weak number. And that also does come right after we got the October loss of 105,000 jobs. But the main thing that matters with this report is the unemployment number. This ticked up to 4.6%. I mean, geez, it's the highest since 2021. They also continue to revise down prior months' job listings. It really does blow my mind how the government can release jobs numbers and then make the current context of the overall job landscape look good, and then a few months later be like, oh, actually, we're revising them down. The main takeaway from all this is the labor market is cooling, but it isn't cracking. It's enough to pull yields down, but not enough to get a rate cut. My advice is to keep a close eye and watch that 4.6% unemployment rate. Before we look at the charts, let's go ahead and take a look at each of the sectors and which sector is leading us. From a one-day performance on this past Thursday session, healthcare was leading, along with consumer defensive and basic materials. On the week, healthcare, communication services, and consumer cyclical, along with financial sectors, are leading as well. And this does spill into a month-long time frame when you look at how we've been doing over the month and the last 3 months. From a month standpoint, it's clear healthcare is in the lead, along with financial sectors. Technology is taking a hit, along with energy. Energy posted a 6 handle as the Iran war seems to simmer down and no more escalations are on the table, it seems, for now. Now let's hop into the charts. Before we get into the main levels on the SPY, let's just take a look at the bear chart along with the EMAs overlaid. Mainly the thing that I noticed when I first see this is you start to look at the highs that are being made. The all-time high, a slightly lower high here, and then this week, present week, we're currently making lower highs, so price is starting to stair step down, and we're starting to get into a bearish trend. Not something to ring the alarm on, as we can definitely see that the 50 EMA has held as support in this entire move, and Thursday's close. And on Thursday's close, you can see we were held up by the 9 and 20 EMAs. So bulls aren't totally out of this contest, and price is remaining to be pushed up. I wouldn't say we need to be worried that there is a crash that's imminent or we need to go and sell all the stocks we have and cash out our 401ks. This is the FUD that Wall Street tries to give retail in order to take our shares, and we're not falling for it. Taking a look at the main levels on the SPY, we're starting to once again hit our head on this previous resistance level of 749.54. We can see this really has been a level of contention within really since early May. Once again, the last 2 days of trading, we've hit our heads on this resistance once again, and breaking above 750 will be the key catalyst on retesting all-time highs at 760. Bulls do definitely need to get back above there. Overall though, price on Thursday settled above the 8 and 20 EMAs. So bulls are technically still in control here. I mean, it looked a lot worse than it actually was. Price action literally only went down 0.13%, which is barely nothing. You can call it a flat day. But if you looked at some names and some of the drawdowns, you would think that we were selling all our stocks and running for the exits. As long as this trend remains above the 50 EMA like you see here and the above the 8 and 20 EMAs, the bulls are in control, and I'm still in the camp that 760 will be retested and the all-time high for SPY has not been put in yet this year. Taking a look at the QQQ, it's a bit of a different story than the SPY. We closed down 1.73%, nearly a 2% flush intraday. Nasty day for us. And one of the key insights I would notice is that we closed under the 8 and 20 EMAs. You notice that along this entire bull run since the March 30th lows, we've been trending above the 8 EMA. This has really been our line in the sand, and once breached, we always find buyers to buy us back. We've fallen under it briefly and found our way back above. And right now, as of yesterday's close, we can see we closed under the 8 and 20. Nothing to ring the alarm on. I would say you really start to panic if the 50 EMA is given up. I mean, you see back on June 9th, we came, tapped it, wicked down, but ultimately shot right back up to 740. So bulls, keep in mind, as long as we're able to hold above the 50 EMA, we're good to go. Now let's look at the QQQ in a little more detail, taking a look at the major levels to watch out for. I really wanted to see bulls defend the 725 level yesterday, but unfortunately the bears were able to get control and close us right back down to the 713 support level where we have been trading around. And really on this chart you can see that's where the most of the touch points persist. Will bulls be able to protect the 713 level and ultimately we bounce back to get back above 725, mount it, and make our way back towards all-time highs? This upcoming week will show us. In my opinion, as long as we stay above the 50 EMA, we're good to go. Now let's take a look at the SMH and see how semiconductors are holding up. This is really where the brunt of the selling took place. Another 4.5% down day. In the last 3 sessions, you've topped out at 659 and fallen to lows of 580. I mean, it's nearly an 11% drop in 3 sessions. A lot of the winners that have been carrying this market going forward are really starting to show weakness. We'll get into it by looking at the Micron and SNDK charts after we take a look at this, but really semiconductors are losing steam here. Bears are starting to push this under the 20, and just like the QQQ and SPY, the SMH has rode this 8 EMA all the way up since the March 30th lows. You have a few times you broke down towards the 20, but bulls have always been able to pick this back up and flip it above. The question going into next week is, will bulls be able to recapture the 622 level, which coincides with the 8 EMA, and get back above the 20 EMA as well? They're both very close in price. Let's take a bit of a closer look, looking at the major levels on the SMH. The 3 levels I have written out are 648, 612, and 581, which we came right down to on yesterday's session. And it almost lines up perfectly with 575, which is the current 50 EMA. Price really needs to reclaim the 612 level and bring us back above the 20 and 8 EMAs in order for this bullish trend to continue. So far though, it's still lower highs are in place. You have your low. So far though, it's still higher lows that are in place. You have your low here, another higher low printed, another higher low printed, and a very slightly higher low printed. The highs are still getting higher as well. So it really all depends on, can bulls continue this? You had your first lower high in this entire segment. So the question for next week that I'd like to see bulls push price back above 612, mount it, and continue back higher towards 640, 648. Those are your main levels for the semiconductors going forward. Now let's look at the 2 main culprits that were weighing down the SMH and the QQQ indexes. You see SNDK on the left We topped out at 23.54 back on June 24th, and as of yesterday's close, we closed right all the way down to 17.45. Wow, what a dip. Yesterday's session posed a 14% decline, and looking at Micron, it's more of the same story. The stocks topped out at 12.55 on June 25th, and as of yesterday's close, we closed at 9.75, another 5% down day for Micron. I think within this market, the question is the memory trade over? Is the AI bottleneck still a narrative that we can continue to run by and the bulls can continue to push price higher? My opinion is yes. Yes, it's true. We did give up the 20 EMAs on both of these memory names. Both the 20 and the 8s have been given up. It's looking like the 50 is going to have to be our line in the sand. So unfortunately for Micron bulls, we could see price dwindle down to 881, and for SNDK we could see price come down to 1643. Both both of these moves would be a healthy pullback, and I could see price continuing higher. I mean, from the last time that Trump has called out a stock, I mean, you look at Dell, INTC, all of these stocks that the president is intertwined with, and Micron is his new baby on the block. Could we see Micron hitting 1500 going into year's end? My guess is yes.